Hi, this is Jim Nissen again, and here's a little bit of information on the purpose of the Quick Term Timing channel and website. Now, the options traded on the Standard & Poor's 500 Index, or SPX, currently average about 121,000 options per hour. Now, the dollars involved average about $2.5 million per hour. This activity gives us an instant sentiment reading on where the option traders think the market is headed. Now, as a broker in the 1980s, I was fortunate to have an article published in Barron's titled "For Stock Market Swingers." You can see a copy of the article at quicktermtiming.com. As my article explains, the market sentiment theory, simply put, contends that when the majority of the investors are bullish, a top is reached. Because if most are bullish, if they're really bullish, they've already bought their stock. Who's left to buy from them? Conversely, if the majority is bearish, that's the bottom, because the majority of investors have already done their selling. It's a contrarian view of the market. When most people are bullish, the market should go down. When most people are bearish, the market should rise. Again, this theory works some of the time, but some of the time it doesn't. But it's always useful to know the current market sentiment. Now, to follow the quick term timing indicators, first go to the website quicktermtiming.com. Start by reading the article for Stock Market Swingers. Even though it was written over 30 years ago, the principle of the stock market sentiment has not changed, and the measurement of puts and calls hasn't really changed either. In fact, because of the huge increase in the option activity, the indicators have actually become more meaningful. Now, next, go to the basics page to help familiarize yourself with the tools that we use. Next, go to the tutorial and view the action as it normally occurs based on the dollars of calls traded versus the dollars of puts traded. Now, I have also included charts that show the intraday variance of the total value of all the calls on the SPX index versus the dollar value of all of the puts on the SPX index. Now, these graphs are based on the bid and ask for all of the options on the SPS index, and they can show you when the market is getting either overbought or oversold based on the option activity.